Hi, I'm Phil with a Henry Wealth moment entitled Our Factor-Based Investment Philosophy. I shared a video called 3 Investment Principles. That video discussed our belief in asset allocation, diversification, and portfolio rebalancing as essential pillars in building a wise portfolio. This moment will build on that foundation and discuss our actual investment philosophy, why we believe in and utilize what is called factor investing. To understand what factor investing is, let's first consider 2 other popular investment styles, namely active management and passive investment management. Active portfolio management is, as its name suggests, active. Lots of movement, moving from stocks to bonds to cash, which is called market timing, as well as to maneuver within a certain asset class, all in an attempt to add what is called alpha. Alpha is the return on investment that, if and when gained, exceeds the return on a benchmark. Passive management involves no movement. It's a buy and hold strategy. There's no thought given to what stocks or bonds to buy because passive management replicates a known index. Hence, passive management has become known as indexing. And because there's almost no trading or research needed to construct a passive portfolio, internal management fees are also lower than its active portfolio counterparts. Consider the most popular index, the S&P 500. There are many S&P index funds available that replicate the S&P 500, and there are many more actively managed portfolios of large U.S. companies whose goal it is to beat the S&P 500. It's been my experience that most of the time, active managers, net of fees, do not beat the indices that they target in a given year. They often do not produce alpha. And even when they do, there's no guarantee of alpha in the following year. Now backtrack with me to 2003. In that year, I was departing as a producer at a large firm to establish Henry Wealth Management. I was also convincing my brother Dan to join the business. Both transitions were successful. Also at that time, I was becoming disenchanted with the far more popular active strategies in favor of the far less popular passive strategies. And at that time, advisor friends of mine introduced me to a different kind of investment strategy deployed by a firm called Symmetry Partners. Symmetry, then a $1 billion firm, had been managing portfolios for their own clients for close to 10 years. And 4 years earlier, they began to make these portfolios available for other financial advisors to use with their clients. Symmetry portfolios were way more similar to passive management than active, but with a twist. Symmetry portfolios are factor-based. A factor-based investment considers an index and then applies academically derived factors to it to tweak the index. Certain factors which under the microscope called history and academic studies can produce slight increases in performance and slight reductions in risk. Nothing is or can be guaranteed, but since that time, Symmetry has grown exponentially, so they have at a minimum garnered a lot of support from the advisor community, those who were seeking an excellent investment experience for their clients. Moreover, Symmetry's pricing was reasonable and transparent, unlike many actively managed portfolios whose expense ratios were high and buried and afforded financial advisors the availability of lucrative commissions. So I became a factor-based investing and a Symmetry fan. I still am. This video is only supposed to be a moment, but Dan and I stand ready to offer much more information about the factor-based investment philosophy and why we offer Symmetry portfolios to our clients and also use it for our own portfolios. At Henry Wealth Management, we believe the first thing we earn is your trust. For more information, please visit our website, henrywealth.com, subscribe to our YouTube channel, and follow us on Twitter @HenryWealthMGMT. Thank you.